Mahindra Financial Services. Then Mr. Ramesh Iyer, the Vice Chairman and Managing Director, joins us. Hi, Mr. Iyer. Thanks so much for joining in, sir, on the show. Now, your disbursement growth has been good in Q3, keeping in mind that we had demonetization that played out. Your view on the growth ahead?
So, when in November we had a small chat and we were a little worried as to what would really be the impact of the demonetization. I think as we look back and what we have seen during the quarter, we think that things are returning back to normalcy, customer sentiments is returning back to positivity, dealership footfalls are increasing. And I think it would largely in rural market be driven by the farm cash flow improvement that one definitely expects after good yield in November and also expected good yield in January. And October by itself, pre-demonetization, was a great festival month, and of course in this quarter there is a benefit of that volume as well, which has resulted into 14-15% growth in disbursement. But I think we do believe that sentiments are returning back to normal, volumes are restoring itself, and I think we are also getting a benefit of being deeply penetrated and the benefit of some local banks volume which otherwise may not be very active possibly is getting added to our volumes. And many more OEMs have moved into the rural market, and a little of all that is also added to our volume. So I think we feel very confident and positive that things are returning back to normal, maybe a little slow or it takes a little longer than what one would expect, but definitely the sentiments are turning positive and we do see the benefit flowing.
Okay, the sentiment is turning positive, though normalcy could take some more time. So the RBI's dispensation has been used with respect to your asset quality recognition. What would have been the gross NPAs without this dispensation of the RBI?
See, first is it is little unreasonable to add back the unrecognized NPA because ultimately they are caused by an event which was of an abnormal nature for the quarter. And that's the reason a dispensation is given, and then you take the benefit of that dispensation that is available. But what we have done though is that 200 odd crore was the total value of such NPA which would have come into the book in case dispensation was not available. But we have taken benefit of only 150 odd crores because we felt that the assets like personal use vehicles, like cars, etc., would have normally paid except for some delays at the customer end. But the real impact is on farmers and the transport operators and the local people carrier businesses where the cash flows got shifted. The confidence is that with a good farm cash flow and the increased transaction levels, this would get corrected in the fourth quarter itself. And in any case, I think the RBI circular allows you only a 90-day period from November onwards for a dispensation, and therefore between February and March, one would see the correction of this happening.
Well, Mr. Iyer, the cost of funds, just taking a closer look at it, it's been on the higher side. How do you see cost of funds panning out going ahead?
So clearly, when our increase in finance cost is seen at 11%, as you mentioned, is not caused by increasing borrowing rate. We actually have got a benefit of the borrowing cost of at least about close to 60 basis point plus during this quarter. But why is the interest cost gone up is because in the third quarter, the disbursements were very high. And even if you were to take, let's say, just last 1 month or 45 days of disbursement, they don't bring in immediate revenue because you just do the disbursement and the contract commences to generate revenue from the following quarter. So there is an interest cost which is sitting out on the cost side without a revenue against it being generated immediately. And that's a little compression that you see of the net interest margin. But going forward, clearly as the revenue starts generating from this new disbursement made, you will start improvement happening. Coupled with the borrowing cost benefit coming in, we have in the past said that as the borrowing cost comes down, there would be an improvement to the margins that we would see, and we are confident that would happen since we are getting the benefit of the borrowing cost reduction.
Okay. One final question, sir, about growth. Your AUM growth was about 4% on a quarter-on-quarter basis. Could you give us a sense of what growth will look like and which segment will be the key driver?
Very clearly for us, the growth story does come from, the car segment because we are today financing almost all cars. We were a very strong player for Maruti range of vehicles, but we've also now started getting into many more cars which get sold in the rural market. So clearly car segment is a growth story for us. Pre-owned vehicle have remained a little subdued, and especially in this quarter with not too many brokers picking up used vehicle, etc. It did see some flatness, but pre-owned vehicle is another area strategically that we look at will give us a good healthy growth. I think after a good monsoon, the farm segment has shown substantial improvement for us, and the tractor growth, as you said, has registered growth for us, and we have also got into pre-owned tractor financing, and therefore tractor will be the other segment to look at. We are a very marginal player in terms of commercial vehicle construction equipment is concerned, and therefore the growth rate for us may look higher, but on a balance sheet basis, I think commercial vehicle construction equipment is about 7-8% of our balance sheet, and that may either retain or go up a little more. But I think more fundamentally it will be cars, it will be tractors, including pre-owned tractors, it will be all the pre-owned vehicle, and retention of market share when it comes to Maruti range of vehicles and our own auto sector products is going to drive the growth for us.
Okay, sir, we leave it there. Thank you so much for